How's it going, everyone? It's your boy Flutter. Welcome back to another YouTube video. Today I'm going to be discussing what the different types of traders are and how they operate. I hope by understanding what the differences between the types of traders are, you can make an informed decision about what approach works best for you.
Guess that's the cost of only being human. I'm near a decade in the game, still learning like a student. My focus never been the fame, only constant improvement.
The different types of traders are swing traders, scalp traders, day traders, and investors. Day traders usually follow the money. There isn't much researching in day trading involved, as day traders usually trade the runners of the day, also known as the tickers that have the most volume. Unlike swing trading, day trading does not require any researching or due diligence before entering a stock. The only researching day trading may require is verifying that a ticker you are entering has news before you enter, but that is an optional step because a lot of people do just enter a ticker without really checking if it has news. As long as the volume and the momentum is there, that's all that they really care for. Me, on the other hand, I like to make sure that there is news involved before I do enter a ticker, just because the tickers that are running off pure hype and pure social media pumps, tend to dump more aggressively and a lot faster. And when I do trade the tickers that are running off hype, I do usually trade them with much less shares, and I usually make it a much shorter trade. The day trading life is much messier than the swing trading life. You need to be actively searching and charting the top gainers of the day by filtering through the top gainers list on brokers and just waiting for the right moment to enter. You need to be filtering through different tickers, not just focusing on one at a time, even if you're in a position, making sure you're not missing other opportunities as well. A solid tool that a lot of day traders use is a scanner. A scanner can use volume and other metrics that you provide it with to help you search for stocks. For example, my volume scanner alerts me anytime there is a volume spike on any new penny stock, and that has helped me find a lot earlier entries on a lot of trend runners. To summarize, here are the exact steps to successfully completing a day trade. Number 1, find the stock you want to day trade by filtering through the top gainers list. Number 2, verify the ticker has solid news by checking a news website such as newsfilter.io. Number 3, chart your support and resistance levels on the ticker by filtering through different time frames and making sure to chart every important level. Number 4, plan out your trade before the time for entry even arrives. Have your entry, exit, and stop loss noted before you even take your entry. Number 5, take your entry and most importantly, stick to the exit and stop loss that you noted before you entered. Swing traders, on the other hand, look for longer time frame trends in the market and hold positions for days or even weeks at a time. There are many different types of swing traders. Some swing stocks that are oversold and ready to bounce, and some swing stocks that are breaking out on the daily or weekly time frame. These different types of traders have different risk-reward ratios that work out for them. For example, a ticker that is breaking out on the daily is a lot more risky than a ticker that is oversold and ready to bounce. However, the ticker that is breaking out on the daily, in most cases, will have a much quicker and higher reward. Unlike day trading, on top of all of the technical analysis that a swing trader has to do, they also have to do due diligence and fundamental analysis on a company. Swing traders have to analyze the company's financials and look through a company's balance sheets, SEC filings, and a bunch more. Some swing traders won't even swing a stock unless it has an upcoming catalyst. If you don't know what a catalyst is pretty much upcoming clinical trial results, a product launch, upcoming earnings release that's coming up, or anything of that sort. You can find upcoming catalysts for a ticker or anything that I mentioned previously on finviz.com. Well, if you guys just heard everything that I said and are thinking to yourself, well, how do I do due diligence? How do I look into a company's financial history? I'm going to leave a couple links in the description below that pretty much go through the entire process of finding swings. They were videos that I made a couple years back, and I went through a couple swings, exactly how I found them and why I was trading them. And I hope you guys watched those and I hope you learned something from them. The last type of trader that I'm going to be covering in this video is a scalper. Now, scalpers are pretty much like day traders. They buy and sell during the same day, but unlike day traders, they capitalize on even the smallest price movements. For example, a scalper will enter a stock that is breaking out at $4 and sell within the same minute's candle at $4.04. Because of the small profit margins and because you're entering at an extended price, scalping is one of the riskiest forms of trading. And finally, finding a scalp is pretty much the same process as finding a day trade. The only thing that's different is how you trade them. Ultimately, I want you guys to know that I think it's important for you to understand your own risk tolerance before deciding which type of trader you want to be. I hope this video helped you in some route of, figuring out which way you want to approach trading with, and I wish you guys a great trading week. Have an awesome day.